Hello and welcome to Crypto Weeklies. Today let's talk about render and its token RNDR and conduct AI-based forecast for render. We have the graph, we also have the regression model, the simple moving average based risk model, dollar cost average related regression based model, and time weighted average price based risk model for render. This is again, none of this is financial advice. Let's start with the machine learning based forecast that we have for render today. This is the weekly price action, average weekly price action for render since token was launched in 2020. You can see the this on CoinMarketCap. If you want to see the chart on a logarithmic scale, we have the similar chart on here on our website cryptoweeklies.com. The link is on the bottom of your screen. All the charts are available for free. You don't have to pay or sign up for anything. So this is render's current price at around $7. The tokenomics around 400 million renders are in circulation. Total supply at around 530 million. The market cap at slightly under that is the fully diluted market cap slightly under 4 billion, but the current market cap around 2.7 billion. By market cap, this crypto is at around 34th rank, but by volume at around 81. Going forward, analyzing the AI based price forecast. This is machine learning model. This is not some prompt engineering. We have developed our own machine learning model trained on price actions going back to 2020 at a weekly level, and the following are the forecast. Again, not financial advice. The base case scenario is the line in pink. The one standard deviation bull case is at around to the upside is at around the line in yellow, and the one standard deviation bear case at around line in green, light green. So, this is the key idea with these forecasts is, if you were to ask the algorithm what could be the price going till the end of December of 2024 for render, and if you were to ask it keeping at around 70% confidence, what could be the range of the price till December? This is the first forecast. Then the second one we have at if we are asking essentially what is at around 95% confidence, what could be the price. So if the confidence level is increased, the range gets wider and wider, so that to be more and more certain of a price analysis, that is the future prospect for a crypto. If the percentage increases of the confidence, then the price action also gets reflected in the price actions. The base case scenario without any bias to the bull case or the bear case going forward till December. Now the price is slightly under $7. You can see over here. The base case forecasted by the model is price action between $6.90 all the way to about $11, somewhere between $7 and $11. If the market were to rally with 70% confidence, the price action could be between $8.50 and about $29. That's the bull case. And if the price were to crash, the one standard deviation bear case is about between $3.50 and $6.12. So if you are, because this is a week by week range, if you are interested in a tabular value, this is a table where the base case is over here going forward till end of December 2024. To its left is one standard deviation bear case, to its right is one standard deviation bull case, to its second position to the left is two standard deviation bear case and two standard deviation bull case to its right. And the two standard deviation bull case and the bear case will spend some time on this one, because again as the confidence of the model increases, the range also gets wider, as we described. If the token were to have a two standard deviation bull case in 2024, the price could be between $9.50 all the way to about $70. And equally, if the price were to crash, this the two standard deviation support is between $1 and $5.50 for render. So this is the AI based machine learning based forecast. Now we'll spend some analysis of where the price action is currently based on the regression model. Again, we have the same color codes that we had for the AI based forecast. This is again our polynomial regression model, considers renders price action at a weekly level and wraps first of all understands the relationship between time and price at the base case level, which is the line in pink, which is the fair value for render. Right now per the model, the fair value of render is at around $17.50. The 1 standard deviation bear case at the 1 standard deviation bottom, 1 standard deviation bottom at around $9.50, 2 standard deviation bottom at around $4.9. The price is between the 1 standard deviation bottom and 2 standard deviation bottom, and this is again, you can see that if we were to get rid of the 3rd standard deviation band, you can see the price action spends about 95% time within these bands. That's where the 95% confidence level comes for the AI model as well. And if you were to get rid of the 2 standard deviation bands, you can see about 70% of the time the price action stays between the 1 standard deviation. So if there were a mean reversion back to 1 standard deviation to the downside, that valuation is at around $9.23. So that's a $9.3. That's a key level to watch for render if there is a mean reversion back to this $9.3, and the fair value again $17. That's one of the key levels to watch. And if the bull market is in full swing, the $34 becomes more and more important. So again, you can see that there has been the relationship of this polynomial regression function. You can see this was kind of flat in the bear market, but the bands have picked up in the momentum. That is because render has had a fairly decent rally from beginning of 2023, January 2023, when the price was at around 57 cents. Now it's about more than 10x from that level, now that around $7 at around 13-14x from the level. And this is again evident in the 7 gems which we have analyzed using Sharpe ratios, which identifies top 7 cryptocurrencies which have had a great run starting 2023, and again the change, the total return divided by volatility, that's how we got the Sharpe ratio over here. And render is definitely one of the cryptos, again volatility of 1, total return since January 1st at around 15x, Sharpe ratio slightly under 15. Definitely one of the 7 top gems in the crypto market. We have covered Injective, Caspa, as well as Solana, Render. We had just covered Bitcoin yesterday, Jasmy over the last week. So if you are interested in AI based forecast for all of these gems based on the Sharpe ratio, please subscribe to the channel. Also give this video a like and check out the other videos on the channel. So again, coming back to Render, it's one of the top performers over the last 1.5 years. Going forward, Render's risk levels and analyzing how the price is doing with respect to 20-week moving average, you can see the current risk levels are at the lowest risk band between 0 and 0.1. That's because the price is not too far gone from the 20-week moving average like it was during March of 2024. This is again a short-term topping indicator that we have worked on, normalizing risks between 0 and 1 based on the difference between price and the 20-week simple moving average. You can see this is how, and if you are trying to accumulate, you can definitely check out the risk levels. Again, not financial advice. When the risk levels are below 0.3 towards the end of the bear market, that's when this crypto has been more lucrative. Right now the risks are fairly low, but that is just one single data point. If you were to combine this with the dollar cost average related model, which takes into consideration the price and with respect to the regression, the polynomial regression function that we have seen on the regression analysis, this takes into the consideration proportional distance between the price and the regression function. Again, at using this analysis as well, you can see the risk levels are less than 0.1 over here in the lowest risk territory. Again, this crypto has spent a lot of time in this low risk band, but again these are 2 data points. It would be great to have another data point, that is the 3rd data point which we have for you today, is the time weighted average price. This is a new indicator that we have launched. This is the price of render, and the time weighted average price is this blue line. which measures the average price of asset over time, particularly useful to check if we are buying the top or buying the bottom. And again, this is the risk score, which is color coded on this price. If you are interested in the actual risk score, you can check out over here. It's they are also represented in price based on color code. They are calculated based on the proportional difference between the time weighted average price and the current price. So if the current price is too far gone from the time weighted average price, there is a chance that this is a local top, and this is again represented on the risk levels. So for example, right now the risk associated with render per the time weighted average is at around 0.7. Once they culminate, usually when the risk scores are above 0.8, over here you can see in the last bull market the risk went at around 0.98, and over here, if we get rid of this, or the latest March 17 peak that render had, the risk was at around 0.94. You can see right now the risks are slightly lower than that, but again not as low as render had during the bear market, essentially zero risk. Again, when the price is below the time weighted average price, the risks are zero, because again it's trading at a discount at that point in time, like it did starting May of 2022 till about January 2023. So those again, if and when those opportunities arise, we'll definitely make a video on that. And if you don't want to wait for the video, you can always check out the website. This is cryptoweeklies.com, and this holds analysis for most of the top 100 cryptos by market cap. Also has indicators such as sentiment analysis. For example, today's overall sentiment based on the last 24 hour worth of price actions at 50. You can see there are some bullish narratives, some bearish narratives. This is all driven by AI model. Again, PeakValley analysis, which normalizes the risk across the crypto market between 0 and 1 and checks out what is the latest risk. You can see we spent in initial part of July, the risks were at a low risk level. You can see over here we are back at 0.25 risk thanks to the recent pump in the crypto market. Again, has information of NarrativeCloud, which is again the word cloud based on the top narratives related to crypto market discussed on YouTube and X. You can see over here Bitcoin top narrative bullishness, again over here Ethereum, altcoins, and this gets updated every single day. So again, this is a short demo of the website. One last thing that I would like to leave you with is the simple moving average related risk. This is Bitcoin and Ether. The key idea is again the normalized risk level between based on calculated between the difference of the price of Bitcoin and its 20-week, similar analysis for Ethereum as well. Right now Bitcoin and Ethereum both have left the low risk regimen that they had spent considerable time starting the first week of July. That was again a great dip buying opportunity per this analysis. Again, not financial advice. So the key idea over here is when the SMA risk is high, like it was during middle of March of 2024, that's a good time to get out of the market. Again, when the SMA risk is at low point, that is between 0 and 0.2, that's a good time to get in the market. Like we had spent couple of days in that regimen again between July 6 and 7. So with this I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.